Hi, Don Bailey. I'm going to share with you a tool, not the kind of tool that you have in the shop, but a tool that I put together a number of years ago back in the 60s, actually in the 50s, 58, 59 right in there, that I put together on some ledger paper, and of course now we do it on an Excel spreadsheet. But what a valuable piece of information. If you adopt this, you will find comfort or discomfort depending on what the numbers are. So what I'm going to share with you is how you can keep track of all of your current assets in your business. And this goes for almost any business. This tool that I put together here, you can use whether you're in manufacturing or in retail or whatever it is. But it's very simple. And I want to emphasize that this is the kind of information you need almost on a daily basis because it gives you a pulse of your business. You can't find it any other way. Yeah, you can get financial statements once a month, once every 3 months. And from those of you that get it only every 3 months, shame on you. But if you do, this is going to help you. So let me start from the beginning. I want to talk about what the columns represent. The first one is pretty simple. It's your checking account or your cash. The next one is accounts receivable. Well, what do I mean by accounts receivable? That's simply people that owe you money. You've sent them goods or product or business, whatever you sent them, and they haven't paid for it yet. So you're carrying them on paper. So we know that they owe you the money. And then we're going to add those two up and we're going to come up with a balance. So, and again, this is done on Excel. It's very simple. The formulas are easy. So now we got a balance here. But what about your payables? What are payables? Payables happen to be, and we're going to talk about trade payables. These are payables where you bought product from them. It might be raw steel, it might be heat treating, it could be uniforms, it could be a bunch of things. But it's what we call trade payables. These are due every month. They're usually due within 30 days. Now there are other payables, but we're not going to deal with those in this column. What are the other payables? Well, you might have a rent payment, electricity, gas, hospitalization, etc. That's not in this number. Now you can set up a column and put it in there if you choose to, but we'll talk about that where we can deal with it. So anyway, these are trade payables. Now we're going to subtract the payables. Now we get another balance. Now let's assume that the bank said we will loan you up to $100,000 for what we call working capital. What do I mean by that? Well, banks generally, this has nothing to do with the loan maybe you use to buy the business or to set it up. This is strictly working capital. Banks will usually look at your receivables and say, well, if you've got enough receivables in there, we'll loan you the money between receivables and cash. So, and sometimes they'll exceed that, but in this case they did. So we're going to subtract the $50,000 that's owed to the bank as working capital. And in this case, he came up with a negative balance. Not a particularly good situation. But let's look at his work in process. Now let's talk about that. And I'm going to assume that you're in the machining business or in the tool business. You can walk in the back and you can look at one of your benches that happens to have some dies on it, or you can look at some of the work flowing through the machinery, and you can say, that's worth about X. You're not going to really know what it's worth, but it'll give you an idea. You guys know if it's 50% done or 20% done or 30. So you can take a good guess at it. So again, this is a guesstimate, but it's better than nothing. So now we got a guesstimate up there. And let's talk about inventory. Well, inventory, what is that? It could be raw steel sitting over there you haven't begun to process. It could be bearings that you bought that you need for a job or some kind of indicators that's going on. So it could be a bunch of things. So that's your inventory. Now we add that all up. Now, if you look at these numbers, this guy's not in particularly good shape. He's kind of on the edge. But what this does show, and I want to go back to the beginning, Glenn, because look over here. We're showing a history here, and we're showing a pattern. So we've got, in this case, only 3 months up here. I've been tracking it for years. So I can go back a year from now or 2 years from now and see what I was doing back then. This is something that I can't emphasize how important it is because you need to have your pulse on your business. You need to know what's going on. There's only one way you're going to know what's going on is if you do it like this. Otherwise, you're never going to know until you get your statement. Sometimes too late. So let's go over here, Glenn. So this column that's in the yellow, is all a part of the formulas up to here. The part in the pink has nothing to do with formulas. This is strictly information. That's all this is. This is notes for you so you understand what you're doing. So we looked here and they see what the payroll was for each, in this case, each week. Then we went over to the next column. We showed that he paid $3,000 down on his payables. But he also entered new payables. So we at least we know what he paid and what he bought. At least he knows. Then he had some monthly expenses. Well, what are those? Well, that could, like we talked about, it could have been Blue Cross, it could have been rent, could have been a machine payment, could have been a lot of things. Those are unusual payments that he made. Again, it's not a part of the formula. It's information, but it's information you need. And you might have some other columns you want to put in there. And I'm not saying that this is the end all, but I am telling you that this program will allow you to have some kind of comfort or discomfort, as I said, because you're going to know exactly what's going on in your business. How important is that? So often we see people that go into business, and if you're a toolmaker and you want to go into business for yourself, this is going to really help you to understand what's going on. How often we see people don't pay enough attention to the numbers, rather. So you don't pay attention to the numbers, you're not going to know what the hell's going on. You can go broke and not even know it, or you could be in the process of going broke. At least this will tell you one way or another. If the numbers are getting good, well, what does that tell you? It tells you that you're on your way up, you're making a profit. And again, that's going to be confirmed either by your accountant or by your CPA that will tell you what the real numbers are at the end of the month or the end of the quarter. And of course, at the end of the year when you file your tax return. But believe me, when I tell you this, I cannot emphasize enough how important this tool is. Please, use it. If you have any questions about it, I want you to contact us, whether you send us an email, contact us on our website, or better yet, we ask you to take a look at our YouTube videos, subscribe to them, pass it on to the other people, the other folks. Share this. And again, any questions, give us a call. So thanks for watching. See you the next time.